Amit Jeswani is joining us today to talk more about numbers. His fund is doing phenomenally well. And Amit, of course, is an old friend. Amit, I believe that you just bought a luxury watch, and that's how your attention went towards luxury watch retailing in India, which has got some representation on the markets as well. Tell us, why do you like this space?
So I've not bought a luxury watch. The day we cross 1,000 crores of AUM, probably that's the day I will buy a luxury watch for myself. But jokes aside, good afternoon, everyone. Thank you, Ajaya, for having me on your show. See, we are looking at market leaders which have a large opportunity, and that is across the cycle. So luxury as a market, if you see globally, luxury is doing very well with Louis Vuitton, Hermes, Dior, all making new highs. Even Ferrari, for that matter, is making new highs. Ferrari is booked for next 2 years. In India also, luxury is a $1 billion market today. It is expected to become $30 billion in the next 10 years. So the growth is going to be very, very, very rapid in the luxury space in India. And we bought one stock out there. And we bought at lower levels, but we bought, and the same thing, that luxury, example, the watch segment, it is 20% of India's luxury market right now. That the player that I'm speaking about, it's growing at 30-35%. I believe there's a large runway of growth out there. And the second player out there, that market share is only 4%. So there is no number two in that space. And that is what we like. We want high growth, high ROIC, market leader, secular, predictable, durable, sustainable, scalable growth. And when we get that, we go big on it.
Sure. So Amit, by that yardstick, I assume you would also look at some luxury car retailers. There's only one listed, but I want to talk more about the category than the stock. Mercedes says that they are competing with SIPs. Some of the other Audis and of the world are also saying they are booked for next 2-3 years. Do you think luxury car retailers would also do well in this light?
Absolutely. Just 1 second, Ajay. So sorry.
Oops.
Yeah. So sorry.
Did you lose him for a second? Yeah, go ahead.
Sorry, Ajay. I had my brokers calling. It's market timing. So
sure. Go ahead.
The luxury, so we don't own the auto player there because we're not so sure about the 30% growth. Only 25% of the business, which is Mercedes business, is something very good in that business, and the after sales business. Actually, if you remove the selling part and you just give me a player who has after sales services, I believe they make a fortune out there. So the real business is not selling cars. The real business, and that is how they may all make money, is the after sales that happens, because you end up paying 5,000-10,000 for every servicing. When your tire gets anything that happens to your car, you get ready for a 50,000 rupee bill. It's either you or the insurance company who's paying it, but regardless, you will not. See, in Marutis, typically people go to a Muhammad or a, whoever's basically a small-time shop owner. But for luxury cars, you go to the guy who sold it to you, the organized service centers, the larger players, of course, and the company service centers. And that is where the game is. And that is a very recurring kind of business which is getting developed for those players. But luxury as a space, not just in India, Ajay, today, Germany is in recession. Okay, 3 days, 4 days back, headlines were that Germany is in recession, inflation is 10%. But look at what is happening in luxury there. All these luxury players are growing at 20-30%. They have no stoppages. And from a car to virtually everything is doing well in luxury. So that is one space to look out for. Not today, but that is forever. Even Apple, the world's largest company, to be honest, is the luxury player, right? Yes, so as our per capita increases, aspirations increase, and yes, things should do okay in the luxury space. I'm very bullish there.
The Louis Vuitton stock price, I mean, the way it has, I wish we could show it to our viewers, but they can always go back and check. It's on a tear, and the world is talking of growth slowdown. So there's one pocket of the market, world market, which is agnostic to recession in the R word. Okay, moving on. Let's talk the other end of the spectrum, the affordable housing space. I understand you've recently added one affordable housing player, but there are many who are doing well in that pocket. What drives you towards affordable housing financiers, just to be clear for our viewers?
So Ajay, we've not added any affordable finance players. We've added one microfinance player. Again, that player has a 31% ROE. Growing at, the management says that, so I've been tracking this management for last 10 years, to be honest, and I met him in 2014-15, and since then I've been tracking him, and As we speak, we might be buying also that stock. So I will not be able to name the stock. But if you get 30-40% ROE and 30-40% growth, I can tell you magic of compounding will happen. And when these FIs come, and think about it fundamentally, I'm not saying the FIs will buy these stocks, but I'm telling you, when you get a combination of high growth, high ROC, high reinvestment rate across cycles, that is the player you want to back. So companies, like we might have vested interest in whatever, and me, my clients, my team members, everyone, and my family, everyone has vested interest. Companies like VBL, example, in the Pepsi space, basically the beverage space, they are reinvesting capital at 28% ROIC. Safari, it's nailing competition, like it's growing 2 times, 3 times faster than competition, reinvesting capital at 30% ROIC. When you get that pattern, you will see magic of compounding and massive wealth creation happens, Ajay. And we are at a starting stage. For the next 2 years, last 2 years have been very difficult. Example for us, we've been flat for last 1.5 years. Not 2 years, but 1.5 years. From October, we've been flat, not down, not up. But now is the time. These FIs have sold between April 21 and March 23. In that 2-year period, FIs have sold 4.5 lakh crores worth of stock. And in last 2 months, FIs have bought only 30,000 crores worth of stock. These FIs will go big on high growth companies. They don't come to India to buy 5-10% growth. They come to India because they want to buy, if they want to buy 10% growth, you'll get it in an Apple or a Microsoft. They come to India to buy that 30% growth, 40% growth. And FI selling is done and dusted. The yield, the 10-year bond yields, etc., have topped out. I'm expecting the next 2 years, decent companies, you don't have to go down the quality curve too much. Decent companies who are high growth, high ROE, that same framework, which is a forever framework, is going to come back with great this thing. That framework should outperform majority of other frameworks. This is what I believe.
Back to you on markets, Amit, in a moment. But what is also happening, a very interesting play is now available in the beverage market, the alcoholic beverage market, Alco-Bev. But Indian markets experience with the Alco-Bev stocks has not been very good. Apart from one small company, a beer company, a challenger, which really kind of gave it a big hit to Kingfisher in the south. But apart from that, UBL, United Spirits, till now have not made a very big value for its shareholders in the last 3-4 years. But now we have a wine company. Why is this category interesting you?
So for every 100 liters of alcohol that we consume 1 teaspoon of wine. Okay. So Ajay, this category, the market leader who has about 50 to 60% market share, does revenues of about 500 crores. And that has taken them 20 years to do 500 crores of revenues. 60 to 70% of wine drinkers in India are women. And that is where the growth in the own brand section, which is the more important section, has been 15% in volumes and 20%, 25% in value terms this year. This is a 20% consumer. If you get 20% growth rate in consumer companies, and you have a category leader, see the largest, and it's a small cap with market cap of 2,000, 3,000 crores. If you hold it long enough, 3, 5, 10 years, because this category will when we speak, Ajay, you and me in 2030 also, that category will still be very small. And I will be telling you that for 100 liters of alcohol that is consumed in India probably consumes 2 or 3 teaspoons of wine. So women working is the trigger here. 15-20% volume growth and value growth, market leader. And why did United Spirits not create value? Because their revenues in 2014 was 10,000 crores. Today also the revenue is 8 to 9,000 crores. So if you don't grow, market chases growth. Radico created 13 times value because Radico nailed it in the single malts, in vodka, etc. So, and market gives 70 to 100 p. See, even now UBL has been underperforming forever. United Spirits has been underperforming forever. But then to the valuations are still 80 times, 90 times. Globally, alcohol is the highest valuation category because the terminal value is very, very, very large, and you can't do advertisements.
Trending, but I must tell you that Amit Jeswani, 2030, 7 years far out, you and I will not be having this conversation on the channel. We'll be, clinking our glasses perhaps in some part of the world on a beach. But good luck to your fund, and we'll catch up once again once you're back from your London trip. So have a great and safe trip.
Thank you.
Let's move on and